Yesterday, Michael Saylor dumped another stash of Bitcoin, bringing his total cash reserves to over $4 billion. And in the last 3 weeks, it feels like we've been barraged with bad news stories, and yet the price of Bitcoin refuses to crack. So what is happening? Are we finally seeing the capitulation we need before the melt up? Or maybe just strategy buying and selling Bitcoin doesn't affect the price of Bitcoin at all? So before I get into the news story for today, let's take a listen to what strategy CEO Phong Le believes.
Right, I'll get to this one in a second. When we sold $2 million worth of Bitcoin, which is 1% of 1% of the Bitcoin that we held, the week in which we sold it, Bitcoin went down 4%. The week after we sold it, Bitcoin went down 11%. And so someone might say, oh, those guys caused a 15% drawdown in Bitcoin by selling $2 million of Bitcoin, right? 1 month later, we sold $216 million of Bitcoin. And that week where we sold it, Bitcoin went up 6%. And the following week after we announced it, went down 1%. And that was 0.1% of the Bitcoin we owned. I don't think it matters, right? Like that's two data points that tell you the exact opposite thing. I don't think it matters. And this slide that you're showing now is more proof of that, which is at the point where this was in November, December 2024, after the election. We were at points in time where we bought $1.5 billion of Bitcoin in a week. And in that particular week, right, like where the average purchase was $363 million, right? Even then, that was only 1.5% of the total liquidity of Bitcoin, $26 billion.
So I think as we've prolonged and gone farther into this bear market, obviously there is two camps going on. One is, I think, the more prevailing narrative that we saw not only on Twitter, but also on the corporate press and all of the media headlines, essentially saying, well, now the largest buyer of last resort, aka strategy, has turned into a seller. What does this mean for Bitcoin? Now, obviously, in the context of how much the total daily liquidity we see, and even weekly liquidity, hold on, guys. Sorry, I just, Sophie was feeding me some ribs. I think I had the sauce stuck in my throat here. Wait, pause. Anyways, in the context of the total daily liquidity and weekly liquidity, monthly liquidity, however you want to zoom out, what strategy does is like Phong Le was saying, it's only a small, it's a single digit percentage of the total amount of Bitcoin traded, buying and sold. And so when you look at the numbers, it obviously isn't as big of a factual effect on the price in the sense that, look, yes, Saylor's been buying, or sorry, strategy. I always do that. You guys know when I say Saylor, I mean strategy. When I talk about strategy, we all kind of mean Saylor. Yes, strategy has bought a lot of Bitcoin. Obviously, they're getting, pretty close to 1 million coins. Depending on how long the price stays down, they might be able to get to 1 million coins at least once they start buying Bitcoin again. Right now, it seems like everything they're doing is to build these cash reserves so that they can strengthen the stretch product and, get their S&P 500 credit rating up so that they can potentially enter the S&P 500. But in the context of how much Bitcoin is actually traded, and in the context of strategy being just one buyer in a global economy, a global race to get Bitcoin, they're not the biggest impact on the market. And even though we see this, and even though we all kind of have this general narrative that, oh, hey, Saylor's the one that's holding up the Bitcoin price, though it did seem like that. I know I've said that on the show. When you look at the numbers, that's more of a narrative rhetorical tool than what the math is showing us. And again, we saw, as Phong Le was saying, we've seen Saylor sell 2 million Bitcoin. And at the time, he basically was saying, hey, we're just testing this. We just got to show the market that, hey, we can sell Bitcoin, that we're not just going to buy and hold Bitcoin. The market tanked. And even though we can all point and be like, oh, look, Saylor made the price of Bitcoin crash, you know what, causation does not equal correlation. that news story when they sold 2 million, it did seem like to be one of the reasons. But again, when you look at the math, it's like 2 million sold on the market. Even if it was on the market, isn't enough to drop the Bitcoin price 15%, let alone talking about how they do their sales, which is over the counter, OTC. So it's really not affecting the market price of Bitcoin. But here we are. Fast forward a month later, we've seen Saylor sell, I believe, if I'm not mistaken, Bitcoin about 3 weeks in a row. And yet the Bitcoin price is still roughly around, I think it's 60. I think it came down right now, 63.5 or something as the time of the show. So strategy selling and buying doesn't really have the effect that most of us perceive it has. And I think that's a good thing. And I'm going to make the general arc here. As I was saying yesterday, I'm starting to get like bottom of the bear market vibes, okay? So just keep that in the back of your mind while I cover the news here. So here is the announcement, and I will break down the filing for you guys. But Strategy increased its USD reserves by $650 million and repurchased $109 million of Stretch. This increased its USD duration by 143 days to 2.7 years and tightened Stretch BTC credit by 10 bips. As of 8/9/26, so that would be what? Sunday? We hold 840,447 Bitcoin in their reserves and 4.65 billion in our USD reserves. So here's the filing. We can look at the data here. It looks like they sold another 6.5 million shares of the MSTR common stock. And then you scroll down a little more, and we'll see the numbers. They sold about 1,690 Bitcoin for an aggregate sale price of $108 million. So I think in the past, 3 weeks, they've sold maybe right around $500 million, around 500 million, maybe a little less. I don't really recall how many Bitcoin they've sold in the last 3 weeks. I think last week it was like this clip, kind of what Fong was saying is like 260 million. We get another 100 million this time. I think before they sold about 100 million as well. So it's a little under 500 million of Bitcoin that they sold. Now, here is probably where it gets the most interesting here. If you are a MSTR holder, if you are a strategy holder of the common stock or the Stretch, this is where the numbers are probably more insightful for you. Obviously, they have 2.7 years of cash on hand to pay off the Stretch dividends, the yields. Now they hold $4.65 billion. Obviously, still the largest Bitcoin treasury in the world by a long shot. And so, it makes you ask a very simple question. Well, what are they doing? What is the reason for Saylor selling all this Bitcoin? And I don't think it's that complicated if you remember everything that Saylor's been saying us. To be fair, Strategy has been very transparent about what they're trying to do. Remember, about a year ago, they got the first S&P credit rating. It was like a B+, which isn't the best per se. And then they gave them a 3-point list of what they needed to do and whether they can raise their credit rating within about a year. And every move they've done has been for that exact reason. Of course, they had to make sure that they would sell some Bitcoin so that the Bitcoin was actually liquid, or else it's just sitting there on their balance sheet. And it's basically like an unused asset. It was literally looked at as, oh, hey, yeah, you have 50 billion, 840,000 Bitcoin on your balance sheet. Well, since you're not going to use it, that's a wash on your balance sheet. It doesn't mean anything. So they started selling a little Bitcoin. Turns out they're very willing to sell their Bitcoin. And also, they really don't have as much an effect on the Bitcoin price as we all like to say. So now they are actually making the case that Bitcoin is a usable asset, that yes, it is a productive asset. Yes, there's no cash flow, there's no yield like most people would view a productive asset, but it is on the balance sheet. It does accrue value. It can be sold for liquidity when it's needed. And so every move since that credit rating that Strategy got has been to strengthen that credit rating. Now, obviously, the stretch product is a new wrinkle in this. And if you're watching the MSTR common stock price and the stretch price, stretch is back around $95 per share. So it's getting back to that par. It took a little while for the stretch product, or rather maybe the investors in stretch, to gain a little confidence in that product again. It's probably going to get back to par here very soon. I think everyone was saying it was going to take about a month or so. That seems to be the timeline that we are all watching play out. The MSTR common stock not doing as well, I would say. You know, it did make it under that $100 price point that we were talking about for a while, saying, hey, probably buying MSTR under $100 is a good buy. Well, if you are in the market for MSTR, it might be a good buy. Now, obviously, we don't buy MSTR. We're just buy Bitcoin, hold it, store it, go live your life type people. But if you are looking at MSTR and you do think it's going to get back to 500 as the all-time high, it's kind of looking like a good buy, all right? Like, I'm not going to lie. It's kind of looking like a good buy. Though now I'm doing the standard, I already missed the run, you know. It's too high for me. I should have bought it at, what was it? Didn't it get down like $86 or something like that? But anyways, I saw this good tweet to really kind of summarize what Saylor is doing. I will read some of it again, read a long hour, and then I'll get into what I am seeing this and why I think this is positive for Bitcoin right now. But shouts out to Adrian Morris. I think this is a really good summary. It could be AI. Everything's AI now on Twitter, but it is a good summary. So he goes, I keep seeing people framing stretch buybacks as the company buying at a discount, which obviously you saw here. They did do a $109 million stretch buyback. And then it goes on and says, framing stretch buybacks as the company buying at a discount or profiting the delta or gaining yield when shares return to par. That's not what's happening. When strategy buys back preferred stock below the stated amount, it's spending cash raised from common ATM and, of course, Bitcoin sales, etc., to retire a claim it previously created. That's not generating a cash profit. There's no gain in dollar amount that appears on the balance sheet as earnings. What actually happens is that cash goes out as a repurchase price. The senior claim, stated amount, and future dividend obligation is retired. Then future dividend payments on those shares are removed. We can view this as a capital structure accretion, but it's not as if they are profiting on the trade they made. And Strategy said exactly this, quote, Strategy believes that the repurchases of digital credit securities at significant discounts to stated amount may reduce expected annual dividend payments, strengthen credit quality, key, and create long-term value for common shareholders. And obviously, if you're looking at the Bitcoin price, or sorry, the MSTR price right now in a vacuum, if you're looking at the MSTR price on a short-term perspective time frame, you're looking at these moves and you're like, what are they doing? You know, like, this is not helping the MSTR common stockholders in the short term. But I don't think that that's the calculation that Strategy is making right now. Again, if you listen to everything that Phong Le, the CEO, has said, and the even sound bites of the quarter earnings call with Saylor in them, you realize that they are making plays in these like 4-year time frames. And so if you are looking at the moves that Saylor has recently made in the last 3 weeks, and you're only viewing them in the short term, it's like, okay, well, they just announced they sold Bitcoin. They just announced they did some stretch repurchases. They are diluting the MSTR common stockholders. And you're just looking at the price of MSTR, you're not really getting the whole picture, because they're not doing these moves to try to pump the MSTR stock ticker right now. This is more for like a long-term move here. As that tweet was saying, they are actually strengthening. What is the how do they put it here? I'm sorry, I always forget this here. Wow, I'm blanking on where I put it here. Whatever. I just had it on the top of my mind. I blanked on it. Oh, they are strengthening the capital structure. There we go. Sorry, guys. And they're doing this for the long term. And in reality, you know what is kind of interesting? And this is a side tangent that I just thought of. It is very interesting that Phong Le and Saylor and everyone at Strategy, their official blurbs is, hey, we are doing things in a like 4 to 6 year time frame. Whether you believe in the 4-year cycle or not, it's interesting that all the moves they're making is essentially saying, hey, look, yes, we just created the stretch product. Yes, AI helped me, make $15 billion, but it has been tough for him. I saw an interesting tweet here. It was kind of a meme tweet where it was saying every time Saylor has sold some Bitcoin for Strategy, and it was literally like at the bottom of the bear market. And so, the trolls are out. What is interesting about these moves and the time frame that they lay out for these moves to kind of have an effect, or rather maybe the opposite, not have an effect. It seems like all the moves that Strategy is doing right now is to get themselves in a position where they're not going to be in the same position in 4 years if the 4-year cycle plays out. That would kind of be my read in between the lines kind of take on this. All the moves that we're seeing from Strategy right now is so that in the next bear market, if there is a next bear market, which we can all pretty much at this point assume there will be some form of bear market, they don't get in the same position. Obviously, we saw Saylor a few times, and many people were saying it was probably a mistake. Using all their dollars, it spooked the market. The stretch product kind of went way below par. People were like, I'm never buying this stretch thing again. And so they are, and maybe this isn't the best thing to see from someone creating new products, but it is being tested in real time, and they are experimenting on the open market. And yes, a new product comes with some second order effects that maybe you didn't fully calculate. You sometimes you do something, you don't know how the market's going to react to it. Well, this bear market has definitely strengthened not only the common stockholder, but the stretch product, and I would say any other strategy stock out there. They are doing things right now, and I think they are building on these lessons so that they can withstand anything moving forward. And so in that term, if you are a strategy bull, I think a lot of these moves do make a lot of sense if you are zooming out and you're not just viewing this in the context of, oh, Saylor's just trying to get to 1 million coins. He's selling Bitcoin at the bottom of a bear market. What's he doing? Stretch still hasn't hit par again. And the MSTR common stock is under $100. It's like these moves aren't making sense if he's just trying to pump his stocks in the short term. Where it does make sense is if this is long-term capital structure. If they're doing this stuff so that in 4 years, they don't get in the same, tricky position that they found themselves in this bear market. Now, that's the strategy stuff. What I do find interesting here, and in the last 2 weeks, I think we've seen a lot of news stories that you would expect would have crashed the Bitcoin price. Obviously, one of the biggest holders of Bitcoin selling Bitcoin. You would think that would dump price, not even because of the amount of Bitcoin sold, but because of the narrative that sent. We got the, cold card hack, where some of the most long-term holders of Bitcoin got wrecked. You would think that the price of Bitcoin would crash on that story. Not necessarily because people are selling out of Bitcoin, but because of the narrative that the mainstream media would spin on top of it. Then we just saw a failed fork attempt. All of this doesn't really bode well for the narrative around Bitcoin right now. We have a civil war in Bitcoin. There's no way to custody your Bitcoin. We have one of the biggest holders of Bitcoin selling Bitcoin. Like, all that is negative press for Bitcoin. And Bitcoin's been basically shrugging it off. I haven't really looked at the price since the cold card hack, but it's pretty much been up. Actually, it was up on the morning of the cold card hack. Yes, maybe it's pulled down a little bit again. It's like 63.5. But all of this is just going back to a classic heuristic that as Bitcoiners have held for a long time. That in a bull market, no amount of bad news affects the price. And in a bear market, no amount of good news affects the price. Now, if you flip that, obviously, if you're getting bad news at the bottom of a bear market and the price isn't crashing, that does lend to the opinion that maybe, just maybe, one, obviously there's no sellers left, but we probably have already seen the bottom. So the kind of bullish take here, and I know you guys love the hopium. That's why you come here. You come here because you want to make fun of me. I'm somewhat entertaining, but you really come for the hopium. All of the stuff we've seen in the last 2 weeks, it's really painting the picture that we have a very strong bottom right now. Very strong support. Probably put a better way. If we were still, I don't know, let's say in like 80K or something like that, and we got a lot of bad news and we dropped down to 60K, then it would have been like where we were in February when the Iran war started and we were just getting cooked. Right now, it really feels like, again, there's just no one selling Bitcoin. We're starting to see the ETF inflows come back online. We actually got one of the strongest inflows since about April. So big money's coming in. I saw an article this morning from CoinDesk basically saying they framed it as elite wallets. So like wallets with 10,000 coins and up are starting to re-enter the market. And so in the face of all of the chaos that we've seen in the last 10, what is it? Yeah, about 10, 12 days. The quote unquote smart money is coming back in. Now, I'm not the biggest fan of the smart money idea, or rather meme, but we are starting to see the capital flow into Bitcoin right now. And yes, you know, there's other things in the market that are doing really well. But I think 4-year cycle, you know, we can confirm, hey, we've been in a bear market. Do I still think it's going to wait till April or November until the price really starts returning? Is there one last dump in us? Put possibly one last crash in the price of Bitcoin potentially. But the general sentiment, the on-chain metrics, the off-chain metrics like the ETF, just the price action we're seeing right now, it's really lending to the idea that we've already seen the bottom. And people that are waiting for 40K, like you're going to be waiting forever. Now, I don't want to say we'll never see 40K ever again. Black swans happen. But all of this in context of each other, they are all connected, I would think. The fact that we saw all this bad news happen in the last 2 weeks and the price of Bitcoin is still roughly where it was before any of this happened, it's just like, wow, there's such a strong base right now. There's such a strong support for Bitcoin. Though, I'm still going to give the caveat that I gave yesterday, which is obviously we're watching a very tight price range window right now. If it breaks below 62K, we have one more dip in us. That's probably, you know, if I was a betting man, that's probably where I'd put my money in. If we break above 66K, it's like, all right, I think it's confirmed. Bottom was in at 60K or 57K if you want to, you know, actually me. And now we're going to start making our climb back up. And the next leg of this bull run will continue. The next phase of this 4-year cycle will continue. So again, this week, if you are a number go up, price maxi, tea leaf reader like I like to be, that's the range. Above 66. And oh wait, here, maybe this is the actionable advice. If you have cash on the side right now and you've been waiting for 40K, or one last leg down, if we get above 66, that's probably your cue to start to re-enter the market. Now, I don't mean just FOMO smash by your entire dollars on the sideline, but it's probably the mental check where you should look at the market and be like, okay, 66, we made it. Here's what I'm going to do to deploy my DCA. On the flip side, if we break under 62 and you do have a lot of fiat left on the sidelines waiting to re-enter into the market, then, you know, maybe you wait until one good dip. You do a significant chunk into that. Maybe it goes a little lower than you thought, et cetera, et cetera, et cetera. And then you get your position built out. But I'm been pretty convinced on the idea that if you're waiting until October to deploy all of your capital back into the market, you're probably going to get caught on the sideline. That would be my view of where we currently stand right now. We've had 3 horrific news stories. Obviously, no impact on the price. It's kind of bullish. Now, of course, Saylor selling some Bitcoin is not like a horrific crash here. Like a hard fork is really not that bad if you just were like, I'm just going to run core. But all of them combine, bad news stories, bad press, nothing's happened. Like, dude, is the bottom in, guys? Are we finally going to get a little breathing room here? Can we finally say we are out of this bear market? Is there light at the end of the tunnel? I really hope so. I really hope so at this point, man. It's been, look, I know you guys yell at me all the time, and it's like, bear markets only matter if you're looking at the price, bro. You know, bear markets don't matter. The price of Bitcoin doesn't matter. It's been a brutal, year and a half. You know, we basically went we pretty much just went sideways all of last year. So far this year, we've just getting pummeled. Prices down 50%. Everyone's calling us dumb. Some of our friends are getting, rug pulled by a random number generator on their cold storage. It's been a civil war. Sailors dumping on our heads. And the Bitcoin price it's like that meme where Bitcoin's just like beat up, or maybe it's the Bitcoiners are all beat up and it's like, this bear market's been so fun. Actually, that's the one. There's that meme of the MMA fighter and her face is just like pummeled. And she's like, no, I really enjoyed that fight. That's us right now. We just been getting beat up, but it really does lead into, hodling is simple, but it's not easy. And in the face of everything we've seen in the last 2 weeks, I've been seeing a lot of people tweet they're going to say that you were lucky. Man, at this point, I kind of do agree that, maybe some of us did get lucky, but it's not easy to hodl through everything that we've seen this bear market. Even as someone that's been here for damn near almost 9 years now, actually 9 years will be in, couple of months. My 9-year anniversary is in about a month or two. That's crazy. This bear market might feel, or actually does feel like one of the worst that I've been a part of. So that would be what? 2017 to 2018, 2021 to 2022, 2025 to 2026. Like, this one feels way worse, and we've been around 60K this whole time. The sentiment around Bitcoin right now is probably the worst that I've ever seen. Maybe it's because there is no more unified Bitcoin community as we all knew it back in the day. There just seems to be a bunch of factions and everyone's fighting each other. People are getting wrecked in the Bitcoin treasury stocks. Cold storage, self-custody Bitcoin maxis are getting wrecked. We have forks happening in Bitcoin. All of that general sentiment has just been brutal. We've gone sideways for a year and a half. Actually, we're back to 2021 prices right now. It's been a brutal bear market. Now, I know some people are like, hey, we're just Bitcoin and chilling. Yeah, it's true. But maybe it's because we didn't get the blow off top in terms of price in 2025 that this bear market just felt worse, because we didn't get the dopamine, the euphoria aspect of Bitcoin. It didn't really feel that good, right? 2025 didn't really feel that good. Maybe we're all just chasing the dragon of 2017 and 2021 again. And it's over, bros. No, it's not. But it's been a brutal bear market. And so I'm getting, I think it's more of I'm getting the relief of, okay, finally we can get this bear market behind us, and then we can be a genius for a little bit, Yeah, we're not going to feel like a genius for the next year or two, but maybe end of 2028, 2029, or some point 2029, we can start to feel smart again and Bitcoin's in the 6 figures. And it's like, see, I told you guys to listen to me. But right now, it's been a little brutal. It's been fun, you know. It's all good. Life's all good, but I think I'm not even looking at the chat today. I'm not feeling that good today. I don't know what I have a headache and my stomach hurts. So I can't deal with looking at the chat today right now. So give me a minute. Let me settle in on the show and I'll see what you guys are saying in the chat. But I just keep being reminded right now as I'm talking of Senor Gringo Poppy in the chat. It's like Bitcoin's boring. Like win 150K, bro. Opti, win 1 mil. Dude, I'm asking the same questions as you. All right, bro. But it has been a earn your keep bear market for a lot of Bitcoiners, especially if you got in Bitcoin in like 2024, or maybe look, Down Under Blues. He's like, look, I've been stacking since 2021 and we're back to those prices. It's like, man, this has been brutal. It's been brutal. What more can I really say? It has been a brutal 4 or 5 years here. But if you got in like 2024, 2025, man, really earning your keep as a Bitcoiner. But this is what we've always said. Cost of tuition. Again, hodling is simple. It is not easy. And the not easy part is really psychological. Hence why I like, and I'll keep it moving here. I just realized I've been rambling for so long. It really goes into what my boy Nolan always says, is Bitcoin is a psychological commodity. Yes, you know, it's money. It's a commodity. You could say it's an investment. But really, it's the psychology aspect of it that probably is the most draining. You know, we're battling the entire world right now. Everyone thinks we're dumb. Bitcoin price is down. We have the no coiners in the chat hating on us. We have the people that think we're idiots for holding Bitcoin because they love gold. Or we have the fiat maxis like, yes, you know, cash is king. Let's go digital. Digital cash is the win. It's like we have now politicians attacking us. We have Wall Street infiltrating. It has been a pretty brutal bear market. And it's really all of just what's happening between your ears. It's the psychological pain that you're feeling throughout this whole thing. I know I'm right, but like, why is the market going against me? It really reminds me of, you know, I know Michael Burry doesn't get that much praise amongst the Bitcoiners, but rewatching The Big Short and living the Bitcoin bear markets, you really start to understand how much of a legendary trade he made in 2008 when the whole world is telling you you're wrong, when the market is irrational and going higher than you expect. And then finally it happens and you're like, I knew it. I'm glad I didn't change. I'm glad I stood on my principles because I was right. I was right all along. We will get that moment. We will get that moment. Trust, okay? Maybe, I don't know. I guess at this point, saying trust is not the best thing, you know. We'll verify. We will verify that we will get that point. It's just going to take time, all right, guys? Anyways, on that note, did you guys see Senator Rand Paul yesterday, guys? Apparently, the U.S. has all the gold. And then on in the news, we are seeing continued selling from miners and pivoting into AI. So I'm going to chat about that for today. On that note, first break, I'll be right back. Here's the part that nobody says out loud. Buying Bitcoin on an exchange and leaving it there isn't buying Bitcoin. It's buying an IOU. And the last decade has been a masterclass in what happens when those exchanges don't deliver on their promises.
Bitcoin Well is a self-custody Bitcoin platform. That means that when you buy Bitcoin, it goes straight to your self-custody Bitcoin wallet. You actually own it from the very first transaction. They're available both in the United States and Canada. Pricing is transparent. straightforward, and no nonsense. And if you're buying a larger amount of Bitcoin, Bitcoin Well Infinite gives you concierge-level support through a dedicated executive Bitcoin advisor, premium help for when it actually matters.
You can also stack a little extra through the referral and wishing well rewards. A nice bonus on top of the owning your own Bitcoin thing. So go to bitcoinwell.com/simply and sign up for the Bitcoin Well portal today and buy Bitcoin you actually own. Paper burns, paper floods, paper fades. If your seed phrase is written on paper, it's not really backed up. It's waiting to disappear. Stampseed's DIY kit lets you hammer your seed words directly into commercial grade titanium. Fireproof, crush-proof, waterproof, and permanent. Once your words are in the metal, they aren't going anywhere. Use code SIMPLY at stampseed.com for 15% off anything in the store. That's stampseed.com, code SIMPLY. All right, guys, before I move on, I do want to give a shout out to Keith. So just think about what passes through your family group chats in just a normal week. If you have kids, you know, your school pickups, your vacation plans, photos of your friends and family, medical updates, home addresses, financial decisions. And you may trust the people that are in those group chats, but do we really trust the companies that are operating those apps? And that's why Key gives families better options. It's a free messaging and video calling app built peer-to-peer with end-to-end encryption and no centralized company database holding all of your conversation. So Keep doesn't track your metadata, and nobody needs to provide a phone number or an email to join. Create your group, share files and photos, make audio and video calls. Again, all end-to-end encrypted and peer-to-peer, all without turning your home life into another corporate data profile. So guys, go to keet.io/simplybitcoin. That's Keet, KEET.io/simplybitcoin. Download it. It's free. Invite one person you trust and start a conversation that belongs to you, guys. Scan the QR code down here. Go try it out. Let's try to minimize our group chat leaks here, okay? Anyways, current Bitcoin price is $63,450. That is a 49.7% discount from all-time high. Wow, we're almost back to 50% discount. That's crazy. The market cap is 1.27 trillion, and we are currently at block height of 962,035. I repeat, 962,035. All right, guys. So we saw this interesting post here. Senator Rand Paul, the legendary son of the GOAT, Ron Paul, he made this post, and he goes, what time was this? 11:42 yesterday. And he goes, at Fort Knox, we've come to see the gold. Our country has about 147 million ounces of gold, and about half of it is stored here at Fort Knox. We're going to be going deep underground to see the gold, but more importantly, we're going to be talking today about what happened to our dollar when we separated from gold in 1971. I'm going underground, and I'll let you know what I see in a little bit. So let's watch this little clip here. I do have some follow-up tweets from Rand Paul, and then we'll kind of chat about what this means.
Fort Knox, we've come to see the gold. Our country has about 147 million ounces of gold, and about half of it is stored here at Fort Knox. We're going to be going deep underground to see the gold, but more importantly, we're going to be talking today about what happened to our dollar when we separated from gold in 1971. Over 85% of the value of the dollar has been lost since we delinked from gold. So there is a problem. The media now calls this affordability. But what it really is inflation. We run a debt. As the deficit runs up, $2 trillion a year, part of that debt is bought by the Federal Reserve with newly created dollars. This leads to inflation and prices are up. And my goodness, just go to the grocery store, still look at the price of meat. Prices are up 25% in the last 5 years. It's inflation. It's related to deficit spending. It's related to unbalanced budgets. So we're going to look at the gold today, but really what we're talking about is why is our paper currency failing us, and why does our country continue to run such massive debts I'm going down underground, and I'll let you know what I see in a little bit. Thanks.
Love it. I mean, actually, before I go, I will read his tweets, but, you know, off rip here, I do love the fact that he is talking about the root of the problem that we always love. This got 1.4 million views. That's pretty crazy. Like, this is why we are all Bitcoiners. Now, I have maybe been a bit cynical in terms of, is this the best framing for getting people to get into Bitcoin? At this point, I would argue, yeah, maybe that worked for us. That's what got us into Bitcoin. But for other people, it seems like they just don't care about inflation. They don't care about losing their purchasing power as long as they can, you know, watch their Netflix and continue to buy their Hot Pockets at the grocery store. As long as they're, you know, watching the TikToks and buying, you know, luxury streetwear brands on credit, it doesn't seem like no one outside of very niche communities care about the destruction of purchasing power. But I will give Senator Rand Paul the credit here for hinting on these ideas. Of course, WTF happened in 1971. Go to that website, WTFhappened1971.com. All the charts showing you exactly what Rand Paul just said about when we got off the gold standard, what it has done to society. Now, there is a very good argument to make that most of what we are seeing right now is a direct result, or maybe indirectly resulted from us moving away from the gold standard, depending on, you know, maybe your political views or your ideology. But I think maybe it's not fair to say that all of our problems right now are economic, but for most people, at least as we're starting to see in the more mainstream cultural zeitgeist, that they are framing most of the problems coming from an economic perspective. Now, obviously, there is cases to be made otherwise, but I think for the most part, a lot of people are definitely feeling the problems that we currently are living in, and it is a direct result from us moving away from the gold standard. Now, this is why we Bitcoin. This is why we always talk about number go up and everything divided by 21 million. It is because we once lived in a gold standard. We moved away from that into the fiat standard. We once had hard money, and there is a pretty good case to be made that when you live in a hard money society, society is better. And this is what most Bitcoiners are working so hard to push towards. Anyways, Rand Paul, and this is probably where the most amount of skepticism comes from. Rand Paul follows this up and he goes, yes, the gold is there, all approximately 147 million ounces. It is impressive. But the real point is what it still teaches in 2026. In 1971, we severed the dollar from gold. Since then, the currency has lost roughly 85% of its value. Prices are higher because the money itself is weaker, which we all know this as Bitcoiners. Maybe your friends and family don't know this, but we know this. We constantly talk about this. Goes on, a family making $50,000 with 2 kids that has not received a 25% raise in the last 5 years is falling behind. Crazy. This is now often called affordability, but the accurate word is inflation or theft. Inflation via theft. We run annual deficits of $2 trillion. The Federal Reserve buys about a third of that debt by creating new money. Every new dollar dilutes the value of the dollars already in people's pockets. Gold does not expand when Congress spends. Paper does. That is the difference. Again, this one got 2.6 million views. Now, he did follow this up a little later with this final tweet. The word affordability implies the citizen has failed to earn enough. In truth, chronic deficit spending expands the money supply and dilutes the dollar. What is framed as a personal shortcoming is the direct result of government devaluing the currency. Say inflation. Hey, you know, Rand is no Ron, but you got to give him the effort here. We gotta give him the W when he does the W. Now, obviously, it's just a Twitter post. Like, you know, what do tweets really do in the grand scheme of things when he's a politician? But hey, at least we can say one positive thing out of this, and it is that a lot of the stuff we've been talking about for the longest time it is starting to, at the very least, seem as talking points that the mainstream media might pick up. Like the Overton window has shifted so far in our direction that now we have politicians obviously talking about 1971, about inflation, about currency devaluations. I know it's moving slow, but it's, I guess, moving in the right direction. Now, that's the positives of this, right? The, I think, more cynical view of this, and I do, again, for the Rumble chat, I do have a Tom Luongo tweet here that I know you guys are going to get a good kick out of. But the, just trust me, bro, aspect of this is kind of funny. I mean, there is kind of, like, if you're listening to, hold on, this one. If you listen to what he said in the clip and you read this beginning of the tweet, there does seem to be a little bit of a contradiction here, because he said in the video, he's like, I'm at Fort Knox where about half of the 147 million ounces of gold is held. And then in the follow-up tweet, he's like, yes, all 400 or approximately 147 million ounces of gold are in there, and it's impressive. It really is the, don't trust, verify. Obviously, we can't go in there and verify, and you are kind of trusting a politician. Even if his dad's one of the GOATs, we just got to kind of take his word that the gold is there. And that's where you're starting to see a lot of people on Twitter be like, look, we're taking a politician's word for the gold being there. I mean, call me skeptical, okay? Like, at what point do we actually trust the words coming from our politician? But also, an eye verification of all the gold doesn't necessarily account for a real audit of Fort Knox. But hey, Rand Paul says all the gold's there, or rather maybe half the gold, or rather there is still gold there. I know a lot of the conspiratorial views is like there's no gold in there at all. So, there's a little bit of a spectrum here. That maybe he did see a lot of gold there. Could it be like gold covered tungsten or something like that? Potentially. Obviously, what do we need to completely verify this? We're not just going to take its word for it. Is like lab verification, X-ray machines, making sure that they are actually, I don't know what they'd be, like 24 karat gold bars or whatever they'd be, or it'd be like 23.999 or whatever. So it is interesting. Like, yes, we can tear this apart and say, like, look, looking at Fort Knox gold vault with your eyes is not a real audit. But hey, at this point, was this the gold audit that Trump promised us? Hey, yo, Rand, just go in there and tweet. Yeah. The gold's there. I saw it all. So look, there is a lot to be cynical about in terms of this tweet. I will give him the W in terms of just having the conversation and, highlighting a lot of the things that we've said, shifting the Overton window, et cetera, et cetera. I will give him credit on that. This was an interesting take here from Tom Luongo. And look, you know me, I like Tom Luongo. Sometimes he's a little far out there. And as I usually say when we bring him on the show, at first he kind of pisses you off. And then you sit with it a little longer and you start kind of connecting some dots. And you're like, yeah, he might have a point here. This tweet is pretty interesting. It is a little bit contrarian. But, hey, we got to make this show a little spicy every once in a while. So here's Tom Luongo's take on this, which I do find a little interesting. He goes, why are so many people so invested in the idea that Fort Knox doesn't have any gold? It's an honest question. Senator Rand Paul goes there today, says all the gold is there. It's impressive. And still people are like, nah, bruh, gold been gone ages ago. Why? Because for decades, the U.S. government, when under the control of globalists, refused to say one way or the other about it. We all believed it was gone. Niger's gold reserve is itself a powerful piece of psychological warfare. And this ambiguity was picked up on by foreign governments, grifting gold sellers, and the well-intentioned alike. But nope, you're the smartest person in the room. The gold has to be gone because someone you trusted once convinced you of this fairy tale, mostly by people who today are at best of sketchy loyalties. This idea convinced you to buy physical, hate your country, buy Bitcoin, or some other series of actions. But that trusted agent kept telling you, no, bruh, the gold has to be gone because it should be going up. When the reality was they were just wrong. And now Yuri Bezmenov is laughing his ass off at you because it's been settled multiple times by multiple people in multiple branches of government. And yet, nope, you refuse to believe the truth. FYI, the same people who call me a loser for this are the same people who call those refusing to believe the damage done from the vaccine is real. Same psyop, different target, same cognitive dissonance. That's all. Honestly, like a hot take here. I'm not going to lie, kind of a hot take. But it is interesting to just think about. Again, I think the further we enter into what many people call the fourth turning, the further along we are in the current, potentially World War III scenario that we are, the further we move into the 2020s, into the next decade, etc. Well, I guess the further we move into the 2000s, one thing is for sure. The further we move closer to a digital panopticon, one thing is for sure. And I think that's where there might be some signal in this tweet. We are all undergoing psychological warfare. I don't remember who the first person to say this, but World War III is a psychological war. It's like it's happening between your ears. Again, going back to the psychological aspect, the psychological commodity meme of Bitcoin. Everything is happening between your ears. As everyone's heard before and multiple times in songs and movies, the battleground is your mind. And so it is interesting to hear Tom's take. Now, is there anything of real substance there? Not necessarily, but it is an interesting thought experiment. Like, why do I have this view that the gold is gone? Well, you can make some case that probably the U.S. has been selling a lot of that gold. But what would it take for you to acknowledge that the gold was actually there? Would that change any of your givens? Would that change why you believe in Bitcoin? That's where I think it's very interesting to just at least acknowledge this. That, hey, because I was very cynical when I saw that at first. I was just like everyone else. I'm like, okay, bro, like, I got to trust Rand Paul that he saw all the gold. We've heard the stories that in the past when they did the Fort Knox audit, it's like they just saw a portion of it and they're like, yeah, that's accounted for all the gold. So obviously there is some psychological baggage here when I see this, because my initial knee-jerk reaction was like, yeah, okay, dude. Sure, the gold's there. Like, oh, you saw it with your eyes. That must account for an actual audit. Now, maybe the cynicism does come, as I just said a minute ago, because we were supposed to get an official gold audit. But even if we got the official gold audit, you would probably not even believe it. It's like, who believes government numbers anyways? So I'm just going to leave it there. I do find it interesting, the initial story about Rand Paul, but also Luongo's kind of reaction to it as well. I think it's just something interesting to kind of acknowledge right now. And I think it's not just like a normie economic cultural story. I think it really does also have to go to and connect everything we've seen in Bitcoin in the last few weeks, in the last months, couple of months, years, in terms of what is the Bitcoin story? Why are we here in Bitcoin? What are my psychological priors in Bitcoin? What are my Bitcoin fundamentals here? And being truthful about, well, maybe I was wrong here, but I'm still right here. Maybe, I was a little misguided on this perspective of what I think Bitcoin is and what it's going to do. And maybe I do have to adapt and change my view of what Bitcoin is and what we are all doing here. And maybe, just maybe, I misjudged a lot of people, not only in the space, but that are entering the space, or further, maybe I didn't judge them hard enough. Maybe I wasn't as skeptical as I should be. I think right now, these are all very important questions to ask ourselves, considering that it does seem like we are about to exit the bear market And now when the price starts going crazy again, we might need to ground ourselves a little more because a lot of people did get lost in the sauce. Anyways, I'm going to wrap up the show with a lot of Bitcoin miners are selling, guys. And again, the theme on the show is basically, I think this is kind of bullish, okay? We're not seeing the price crash. I think this is bullish, all right? So I'll be right back. Give me 1 second.
I want to give a shout out to our partner, Ledin. Here's something most Bitcoin holders never figure out until it's too late. You're sitting on wealth you can't touch without selling. Ledin fixes that. Bitcoin-backed loans. You keep your stack, you get cash. And they just introduced their lowest rates ever. No complexity, no fine print. The larger the loan, the lower the rate. These new rates apply to all new loans, refinances, and renewals. You'll see all the rates up front before you apply. The new, lower rates come with Ledin's gold standard protection. Your Bitcoin remains custodied and is never lent out for interest. Perfect 8-year track record of keeping clients' assets safe. Auto top-ups, LTV alerts, and partial repayments to keep you in control. Repay whenever you want with zero penalties or monthly payments. Ledin's perfect $10 billion track record through every market cycle in the last 8 years speaks for itself. Don't choose between a great rate and the safety of your Bitcoin. Get both at Ledin. If you ever thought, what happens to my Bitcoin if something happens to me? Or what happens if I lose my phone? You're not alone. For a lot of people, the biggest barrier to self-custody isn't buying Bitcoin. It's the fear of making a mistake. And that's why I like Bitkey and I recommend it to my friends and family. Bitkey is a Bitcoin wallet built for real life. Not just for day one, but for everything that happens in between. Lost devices, upgrades, accidents, and long-term ownership. There's no seed phrase to write down and worry about losing. And no single point of failure that can lock you out of your Bitcoin forever. What really stands out about Bitkey is the peace of mind. Recovery is built in. Inheritance is built in. It's a complete self-custody system built by the team behind Square and Cash App, designed to make holding your own Bitcoin simpler and safer. Take self-custody of your Bitcoin today using Bitkey. Go to bitkey.world and use promo code SIMPLY for 10% off your new Bitkey. That's bitkey.world, promo code SIMPLY. I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy across 3 continents, HIVE runs dual engines, Bitcoin mining and AI compute. Their AI platform is ranked #1 in the world for network performance, and it's doing something bigger than compute. It's accelerating human discovery, the science, the breakthroughs, pushing humanity further and faster. Listed on the NASDAQ with the ticker HIVE. Catch the latest buzz at HIVE Digital Tech on X or hivedigitaltech.com.
You secured your Bitcoin, but did you secure your devices too? They're still broadcasting your location and digital footprint. GPS, Wi-Fi, Bluetooth, cell, 5G, EMF, all of it is leaking. Escape Zone fixes that. Their Faraday bags block every signal your device emits, so you decide when you're detectable, not the grid. Built for Bitcoiners who know sovereignty isn't just your wallet. It's your phone, your hardware wallet, your keys, and your entire digital life. Go to escapezone.com/simply and use code SIMPLY for 10% off. That's escapezone.com/simply, code SIMPLY. Wow, guys, my heart dropped for a moment there looking at the chat. I was just saying, like, people said the audio wasn't working or something. I'm like, dude, have I been talking to myself for 45 minutes? And the show just stopped working? Apparently not, though. I guess my back end looks like it's working. All right, anyways. Man, that would have been such a bad Tuesday. I'm just sitting here talking to myself for an hour, and this show just crashed on me. Hold on, I'm trying to find my tab here. Is it this one? No. Okay. No, but I'll use this. Okay. So we are seeing some interesting stuff happen in the Bitcoin mining space. Not only did we get a fork And, 2% of the hash rate forked off, created a shitcoin. But we are seeing a lot of public miners not only just sell Bitcoin, but pivot into AI. This one might be the biggest one. Bitcoin miner pivots to AI after a brutal quarter. So formerly Bitfarms, now Keel Infrastructure, reported another loss-making quarter as it completes its exit from Bitcoin mining and redirects its infrastructure towards AI and high-performance computing. The company reported a $64 million loss from continuing operations in Q2 of 2026, reversing a $13 million profit a year earlier, according to its August 10 earning reports. So last year, they were profitable by $13 million. In the first 2 quarters, $64 million loss. That's crazy. Revenue fell 50% year over year to $30 million, while adjusted EBITDA swung to negative $24 million. Absolutely crazy. The results followed an equally difficult first quarter when Keel recorded $145.4 million net loss and $37 million in revenue. The company said that at the time that its rebrand marked the completion of a nearly 2-year transformation away from Bitcoin mining and toward AI infrastructure. Keel has now decommissioned all of its U.S. Bitcoin mining operations in preparation for HPC, or what's it, high performance computing? Yep. Site construction. It also sold 1,085 Bitcoin for $75 million between April and August 7th as part of the wind down, leaving it with only 1,861 Bitcoin. So one of the big public Bitcoin miners has just officially left the Bitcoin mining space. They're just going full AI, HPC. Sold 1,000 Bitcoin in the first half of this year. They still hold some Bitcoin, so I guess maybe you can look at them as just an AI company with a Bitcoin reserve. But if this was just one company, then that would be, maybe not really a concern. But since we are seeing this happen basically across the entire public Bitcoin mining space, that, hey, look, it's been a brutal bear market. And in terms of being a profitable Bitcoin miner, yes, you can get the block rewards, but there hasn't really been that much fees. And obviously that does kind of bring up the broader conversation of what happens when, 2140 and Bitcoin, there's no more Bitcoin mining. And of course, when the price of Bitcoin is 50% down from its all-time high, especially if you're building out infrastructure, you're trying to expand your mining operations. And then the thing you are holding that you need to convert to cash to pay your bills is 50% off. It's been a brutal cleansing for the public Bitcoin miners. Now, obviously, we've seen this general trend for over a year now, where a lot of public Bitcoin miners are looking towards AI and HPC as a way to maintain profitability. They built this huge infrastructure for electricity, and they're starting to see, hey, look, one, there is an AI hype cycle going on. Like, literally, I've said this in the past, and I don't think a lot of people acknowledge the fact, but like the entire U.S. economy and arguably like the entire world economy is being held up by AI right now. Whether it's like the IPO kind of lead ups, whether it's the data center construction, whether it's, some kind of like quid pro quo where, hey, even though that probably wouldn't make, GDP, but creating the data centers, paying the construction costs to build it, the valuations for these companies, you're seeing the valuations for AI companies on the S&P 500 or QQQ. It's only the top, 6, 7 companies right now that are really holding up the entire, stock market indexes right now. And it's all based on this AI hype cycle. So it will be interesting moving forward, whether these moves from these public Bitcoin mining companies going all the way in on AI is going to be the right move. but that's going to play out in the future, right? What we do know for a fact is that a lot of public Bitcoin mining companies have been dumping Bitcoin. You know, thousands, tens of thousands. And again, if this was one isolated story, we've covered a lot throughout the last 6 months, but we also saw this one that's pretty interesting coming out of Riot. So here's Riot. Riot is dumping its Bitcoin to fund a $9.1 billion AI deal that won't pay rent until 2027. Bitcoin miners' construction budget includes continued treasury sales before phase rent is expected in 2027 and 2028. Riot expects a 191 megawatt AI data center lease to generate about $9.1 billion over a 20-year base term. The build needs $2.1 billion to $2.3 billion with $210 million to $460 million of equity before planned refinancing could cut that need. Riot plans treat Bitcoin sales as the main equity source while debt and backstop financing remain unfinished. Pretty crazy. So let's see. I saw the numbers in here earlier. How much Bitcoin have they sold? All right. At June 30th, Riot reported 11,380 Bitcoin with 5,821 pledged against a fully drawn $200 million Coinbase credit facility that put 51.2% of its holdings under restriction, while 5,509 Bitcoin were not classified as restricted. And Riot also sold 9,665 Bitcoin for $732.5 million during the first half of 2026. So we were covering it for a while, right? And here, let me pull up the Bitcoin treasuries and we can take a look at what's going on with the public Bitcoin mining conferences or companies. See, Mara still at 35, about 35,000 though. Pretty sure they also dumped a bit of Bitcoin this last week as well. We have, you know, Riot still has about 15. So let's look at Riot here. The last year, just dumping coin. Year to date, dumped, what, 4,000, 5,000? Plans to dump more. It's getting pretty brutal in the Bitcoin mining space, public Bitcoin mining space, because the margins are so low. Also, you know, Bitcoin's down 50%. Also, it's not very many people using the base layer. Like the fees are still at 1 sat per fee or 1 sat per byte. I mean, look, guys, it's been pretty brutal. It's a pretty brutal bear market, right? The bullish take here, I guess, would be the amount of Bitcoin that we've seen sold, and Bitcoin price is still only 50% off all-time high. In terms of percentages, this Bitcoin bear market was the least volatile in history so far. But in terms of sentiment, and I think maybe the resetting of what the Bitcoin space will look like moving forward, I think it's been like a completely reordering of the chessboard. Now, in that same conversation, I did look at the bit info charts this morning, and here is the Bitcoin hash rate historical chart. Obviously, in linear, it's like it's going up. The reason I kept here on linear is because you can see the decline a little better. Dang, this always happens to me. All right, so we had about 1.26. Yeah, 1.26 Zeta hash. Currently under 1 Zeta hash. So a significant amount of hash power has been taken off the board. Now, obviously, if we go on the log here, like it's still pretty, you know, it's still up and to the right. Maybe it's like right here. You can see the little decline starting around October of last year. Interesting timing of October. Maybe, oh, wait, sorry, guys. I didn't pull it up. Maybe more people got liquidated during that 1010 crash than we all publicly know about. So here's the linear. You guys can see the kind of the crash is a little better. Actually, it probably started in September of last year. Peak being in October. But yeah, maybe more people got wrecked on the 1010 Binance glitch than we all publicly knew about. I mean, we were all looking at the exchanges, but maybe a lot of public Bitcoin miners were also leveraged during that process. But anyways, this does lead into a lot of the conversations. Obviously, we've been watching the sellers currently. You know, Saylor's a tiny seller, but still a seller nonetheless. We've been seeing Bitcoin treasury companies sell their Bitcoin. We've been seeing public Bitcoin miners sell their Bitcoin. We've been seeing the whales initially start to, you know, sell some Bitcoin. I would argue they're probably market makers, and they, you know, are selling some Bitcoin to try to push down the price of Bitcoin. But anyways, we saw a lot of selling happen. We saw a lot of OG Bitcoiners sell some Bitcoin or transfer Bitcoin into the ETFs when we got around the 100K price. Like, we've had a lot of factors playing into the Bitcoin price going down. Now we continue to see kind of the very tail end of the sellers still left in the market. And for everyone that's been asking on the show and in the chat, like, who's selling Bitcoin? Well, it's looking like it's coming from a lot of these public Bitcoin miners. And, you know I've met Ben Gagnon. He's formerly Bitfarms, now at Keel. It's one of Nico's really good friends. So it's very interesting that they have completely pivoted away from Bitcoin mining and gone full AI, because he's a hardcore Bitcoiner. So without really having any inside baseball into what their thinking was over there, I think it just very simply, and just to speculate, like, it's been extremely tough for these public Bitcoin mining companies to operate, and not only operate profitably, but to make the shareholders happy. Which, again, if you are a pleb miner, individual miner, like, there could be a good opportunity in mining right now. But also, Bitcoin mining is one of the, like, most competitive spaces, period. And so the real silver lining for me here is, look, what we've seen, and I think we've seen this across the board for a lot of Bitcoin companies, whether it's shitcoin casinos or Bitcoin exchanges or Bitcoin treasury companies, or just, you know, some Bitcoin media groups. You build up such an infrastructure when the sun is shining. You know, when we're in a bull run, you got investments coming in, you got elaborate plans to build stuff out. Bear market comes in and you realize, oh wait, now my budget is half off. I don't think I'm able to do all the things that I want to do. And half off is like the minimum here. You know, some equity is down way lower than that. But you're seeing this is the normal process of a bear market, where, you know, hate to say it, but unprofitable players and people that got over leveraged, they get cleaned out of the market. They become a forced capitulator. They have to sell their Bitcoin because their business isn't working. And if you can survive during a bear market, if you're profitable during a bear market, then obviously you did the mental calculations correctly. You didn't get over your skis. But when the bull comes back, that's when it's the good days. That's when you're like, okay, we made it through. We survived. But going back to what I was saying in the beginning, it really does feel like towards the end of a bear market. Like, I think the 60K bottom was in. Now, before see, we're still at 63.5, you know, like, do we 1 minute chart to wrap up today's show? I saw an interesting, I saw a funny tweet this morning. I didn't like it. I didn't save it, but it was one of these shitcoin traders. And he's like, it was DJ Khaled, you know, DJ Khaled when he's on the computer and he's like looking at his computer, and it said, me watching the 1 minute chart when I did a high time frame long trade. Dude, so me right now. All right, here's the 1 minute chart, just for shits and giggles, guys. Yeah, no, what time was this? So about, I don't know. I always get confused on UTC. What's 12 UTC time? All right, that's about 6 hours ago. So quick math, what's 6 hours back? Is that 8? No, that's like 6. It's like 6 a.m. Right? No. Yeah, it's like 8. It's like 8. Okay, so 8, we got the high here at 64.4. We dropped about, an hour and a half ago to 63.3. Looks like the 1 minute chart's kind of climbing back up. We're in the 63.5 range. Hey, man. Who knows? Who knows, right? Who knows? Who knows where we're going from here? But it's almost one of those things of like, and I don't want to jinx it. I don't want to jinx it. But when you get kicked in the teeth so much, you're getting beat up. You're like, you know what? What worse? How much worse could it get? And then it does get worse. So, I don't want to say it because that's kind of how I'm feeling right now. Actually, I've been saying it for months. I'm like, look, let's just get it over with. Just like nuke the price. Get to 30K or whatever everyone was saying. And then we can finally get going. All the leverage gets wiped out. Everyone that isn't running a profitable business gets wiped out. Everything gets tanked. And the real true Bitcoiners will be able to make it through. I feel like we've already done that. And this bear market's only been 50% off all-time high. It's just felt like so long. It really has felt like a year and a half of a bear market. We've gone sideways for a year and a half. Actually, depending when you start, we've gone sideways for about 5 years. But if you were smart and you bought the lows and maybe you bought the highs, then your average price is pretty good. But guys, I want to see the price go up. I'm tired, guys. I'm tired. No, I think I don't know what's going on. This morning I woke up with a headache. My stomach hurts. Hey, you show up so I continue to show up, all right? Or maybe it's the other way. I continue to show up because you guys continue to show up. So, hey, we're going to be here. Begrudgingly, we're going to be here. It's our job. It's our job after all. I'll be here doing a show for you guys. I don't know what the schedule is for this week. I don't know if Nico's ever coming back. So you're stuck with me. I'll be here. Might have some guests this week. I don't know, man. Honestly, I'm limping over the finish line right now. Like I said, I was hurting this one. My head was hurting. Stomach was hurting. Good thing, shout out to Sophie. She made some good food right before the show. Hence why I was a little late. And I was like, oh, okay, actually, maybe I just need to eat. Maybe I just need to eat breakfast. Okay. Maybe I need to not just drink coffee all morning. Maybe I need some food in me. Anyways, you guys don't care about my problems. You just want the little monkey to dance. Dance, monkey, dance. So on that note, guys, have a good rest of your day. I will see you tomorrow for another episode of Simply Bitcoin Live, roughly around 12:40 p.m. Have a good rest of your day.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.